Other news now, and the new Governor of the Bank of England, Mark Carney, has used his first public speech in the role to state that interest rates will remain at the current record low until the economic recovery is well established. He told business leaders in Nottingham that he hoped his flagship policy, known as forward guidance, would give individuals and companies greater confidence. Our economics editor Stephanie Flanders reports from Nottingham.
It's not the City of London that's getting Britain's economy moving again, it's all of us. That was one message that Mark Carney brought to Nottingham today. The other was that the bank would still be there supporting the recovery long after the summer fares have gone. The new governor wants us to enjoy the good news coming from the UK economy. He doesn't want us to jump the gun, start thinking the first official interest rate rise is just around the corner. It's not. And in their forward guidance a few weeks ago, he and the Monetary Policy Committee thought they'd made that pretty clear. They said they wouldn't even think about raising the base rate until unemployment had fallen to 7%, unless the forecast for future inflation went over 2.5% or the bank saw a threat to financial stability.
Lucy?
Simon Gray set up his recruitment agency here in Nottingham at the start of the recession. When we spoke to him before the governor's speech, he wasn't yet a believer.
In principle, I think it's a great idea, giving business owners clarity as to where interest rates may be for the next 3 years. But is that actually possible, given other things that go on in the economy? And I'm not actually convinced it is.
The speech was a sellout. They said they could have filled the room several times over.
It is a great pleasure for me to be in the East Midlands.
And no, it wasn't just the governor's accent that was different.
How do you see respective exchange rates moving?
Yeah, John, some are going to go up and others are going to go down. As a core.
The other novelty, a mini press conference. Was he disappointed, we asked him, that the markets were expecting rates to go up even sooner now than before he promised us they would stay low? He said give it time.
Hanging this on markets is to miss the point. What my colleagues, what I'm hearing, are hearing across the country is that there is appreciation for that greater degree of certainty that's being provided by the bank.
So does Simon Gray appreciate it? So Simon, you were 50-50 on forward guidance before the speech. What do you think now?
I'm pleasantly surprised. I think the governor did a good job. He delivered it in a honest, amusing, and very engaging way. And I think the 7% unemployment rate is key. He convinced me that inflation is less of a concern.
It's a tricky balancing act. The new governor wants us to be confident in the recovery, but not so confident we think the cost of borrowing is about to soar. He made a start here today, but Mr Carney would be the first to say the bank and the economy have a long way to go. Stephanie Flanders, BBC News in Nottingham.